Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, you're watching Power Breakfast on CNBC TV18. Now, yesterday back home on the Lal Street, the market gave a thumbs up to RBI's monetary policy decision, with most indices ending in the green. Most notably, we saw a rally in the mid-cap index as well as the Sensex, which claimed the 35,000 mark, the Nifty very close to the 10,700 mark. The banks, however, remained volatile through the session. However, the index ended with gains of about 0.5% after the RBI policy made. A lot of cues to work with today, good global cues. Ekta joins us with all the details. Morning, Ekta.
Well, Mangalam, thanks very much for that. Like you mentioned, the markets did snap that three-day losing streak yesterday. The markets did rally post the RBI policy. So the Nifty closed near 10,700 and closed above its 20-day moving average. The mid-cap index, in fact, after a long series of underperformance, outperformed yesterday with a gain of around 1.4%. What also stood out was the flow figure from the FII. So the FII's net sold only around 81 crores in the cash market, and the DII's net bought over 700 crores in yesterday's trade. So it'll be important to watch what the flow picture from the FIIs would look like and whether eventually there would soon begin maybe a net buy figure. But any which way, it'll only be seen in the next couple of trading sessions. So for today, what we would watch out for is obviously follow-on buying, whether people are confident enough to buy more in the market at current levels. If you look at it, this old problems still remain for us. So, for example, India is currently underperforming the globe. Week to date, the Nifty is down around 0.1%. The MSCI Asia ex Japan is up around 2% at current reckoning. The Nasdaq also is up over 2% on a week to date basis. Even for the mid-cap index, it's down 1% week to date and it's down 12.5% on a year to date basis. So again, the issues such as the auditor issues, the ASM stock list, that continues to weigh. Those fundamental issues still remain for the mid-cap index. But whether or not there is some amount of bottom fishing which is going on will be important to see. Now, in terms of flows, like I mentioned, the FI is net sold and that reduced to around 81 crores yesterday. But if you look at it on a larger picture, for example, the FII is net sold over 10,000 crores in the equity market in May. So whether or not this is just a flash in the pan, whether it would turn into a net buy would be important to watch. For today, US markets are positive, Asia is positive, Brent crude is still around $75 per barrel. So all this is indicating a positive start when the SGX is considered. So that should come up for you. And it is also Bank Nifty options expiry. In terms of Nifty levels, that should come up for you. 20-day moving average, 50 DMA as well as the 100 DMA would be a couple of key levels to watch out for.
All right, Ekta, thanks a lot for that. Individual stocks, what are you watching out for?
Well, I'll be watching out for, the NBFC space. The Reserve Bank of India has revised affordable housing limits, and home loans up to 35 lakh in metros will now qualify for benefits under PSL or priority sector lending versus 28 lakhs before. The government has promulgated the IBC ordinance, so a lot of the banks would be in focus on account of that as well. More news from the financial space. Canara Bank, the UK has fined Canara Bank's London branch, so watch out for that. Sadbhav Infra is going to consider raising of funds. Lemon Tree has signed an agreement for a 104-room property, so they expect it to be operational by June 2020. ICICI Bank has made a clarification on Ruchi Soya that the bank is yet to receive a copy of the NCLT order. McLeod Russell, they've executed an MOU for proposed disposal of a tea estate. They had mentioned that they're going to do that to reduce debt. South Indian Bank, the board has approved fundraising. BOI, there has been a bond rating decline in terms of the rating to AA plus negative. KDDL, there's going to be a board meet on the 11th of June to consider fundraising, and specialty restaurants also, CRISIL has downgraded the rating again, so that stock should probably be in the red.
All right, Ekta, thanks a lot for that. We will keep an eye out on all those individual stocks. So with that, let's slip into another short break. Come back, we talk about the president who signed an ordinance to amend the bankruptcy laws. More details on that when we return.
Well, the president has signed the ordinance making changes to the Insolvency and Bankruptcy Code, or the IBC, with just one big ticket non-performing asset finding a buyer so far, that is Tata Steel's acquisition of Bhushan Steel. The government is hoping that the changes will fast-track more resolutions. Ritu Singh is here with the details of the ordinance. Ritu?
some seminal changes have been brought about through this ordinance, for the Insolvency and Bankruptcy Code. Some of those changes were on expected lines, but some of the others are very, very important. For instance, the withdrawal of IBC proceedings is now allowed if 90% of the Committee of Creditors votes in favor of that resolution. But do remember, once the commercial process has started, that is, EOIs and bids have been invited, IBC proceedings cannot be terminated. Number two, strict timelines will be put in place for the entire corporate insolvency resolution process. No late bids will be allowed and no negotiations will be allowed with late bidders. This is a very important change. Third, pure play financial entities like private equity players and ARCs will not now be disqualified under Section 29A just because, they're holders of NPAs. They will now be allowed to participate in these processes. Also, any other corporate debtor that has acquired a non-performing asset through the IBC route will be given a 3-year cooling off period, after which he will be allowed to bid for assets and not be disqualified under Section 29A. Besides these, there are some other changes that were on expected lines. For instance, home buyers will now be treated as financial creditors. MSME promoters can bid for their companies. There'll be special dispensation for these MSME players. The voting threshold has been brought down from 75% to 66% for crucial decisions and 51% for ordinary decisions. And there will be a 1-year timeline that will be given to debtors to get all the regulatory approvals after they've been declared the winning bidder. The moratorium period of enforcement of guarantee will not be applicable anymore. And there's also been some relief on interim finance. So these are some of the key changes that have been brought about and will go a long way in faster resolution of stressed assets.
All right, Ritu, thanks a lot for that. You alluded to giving the home buyers the status of financial creditors, and how will that help? Well, according to the Corporate Affairs Secretary Injeti Srinivas, this move will help home buyers participate more effectively in the resolution process. Let's hear him out.
होम बायर जो कमिटी ऑफ क्रेडिटर्स है उनके अपने जो प्रोपोर्शन ऑफ क्लेम्स हैं उसके अनुसार उसकी वोटिंग राइट्स भी बन जाती हैं और वो इफेक्टिवली सीओसी में पार्टिसिपेट कर सकते हैं। दूसरी बात, अगर कोई रेंट डेवलपर है, उन्होंने घर नहीं दिए या इसमें बहुत विलम्ब हुआ, तो होम बायर भी सेक्शन 7 का इस्तेमाल करके ऐसे कंपनी को इंसॉल्वेंसी में खींच के ला सकता है।
Okay, well, staying with the IBC then, Videocon Industries has become the latest corporate house to face insolvency proceedings. The National Company Law Tribunal has admitted Videocon's case for insolvency proceedings. The company had appeared in Reserve Bank of India's second list of defaulters in December last year. Videocon owes of bankers. Remember, Videocon had challenged insolvency proceedings against itself at the Bombay High Court in January.
All right, then let's move on to the Monetary Policy Committee that decided to unanimously raise key policy rates higher by about 25 basis points, the first rate hike in nearly 4.5 years or 50 months. But the decision did not spook the markets because the MPC maintained its neutral stance, hinting that this may not be the start of a rate hike cycle. But how will the rate hike impact your wallet and the economy? Lata Venkatesh spoke to a panel of experts to find out just that.
I think what's impressive is we had a unanimous decision today, number one. Number two, the RBI has clearly taken cognizance of the inflation risks in the last 2 months. And number three, everybody around the world had said that inflation targets really get tested when central banks are prepared to raise rates to meet their target. So the fact that the central bank has moved proactively to guard its 4% inflation target over the next year, I think is very credible, is very impressive. I think that's what we should focus on.
Mr. Gupta, there are several things for banks in this policy. There is, of course, the rate hike, but, there is an LCR carve-out. There is as well state government securities which now have to be marked to their true value and not just 25 basis above G6. So net, does it leave banks a little poorer?
This rate hike that happens actually Okay, if you look at the overall market, as of today also the market is in surplus liquidity mode. I don't really think it gets transmitted onto the deposit rates or to the lending rates immediately. But you know, that is more a function of each bank's liquidity position. That is how the banks have been raising their rates, and other banks have been following them also. So I think it will take some time before it really gets transmitted onto the deposit and lending rates. As far as the the LCR, that 2% additional carve-out that has been made, actually, I think that is a part of the overall transition mechanism which RBI has been following for a long time. I think now we have already reached up to 13%.
Manish Madhavan, before I come to the SDL itself, your holistic takeaway for the bond markets, some good, it's only neutral stance, but at the same time, some SLR demand will dry up because of LCR. What is in this for the bond market? Any relief at all?
There are specific nuances of different, announcements which have happened. If you take aside the 25 basis point hike, I would like to mention 3 of them here. Number one is the dip into the SLR for LCR requirements. Besides helping some banks, as Mr. Gupta was mentioning, I think the key message here is the deposit rates or the CD rates which were getting under pressure because the banks had to meet the LCR and they had to issue these deposits or the CDs at higher levels, they would get some respite. So some pressure would be taken off at the short end because of this. And it is very important because the markets were really getting out of hand, I would say, when people were not able to raise short-term deposits.
I wanted to know whether the MPC has slightly overestimated growth and slightly underestimated inflation.
So, again, these are judgments we all have to make. Our own sense is that growth may not be as strong as the MPC forecasts for a number of reasons. I think if oil stabilizes around 75, that's a meaningful adverse terms of trade shock compared to last year. It's almost 30%. Number 2, financial conditions have already tightened meaningfully in the last 2 quarters, and that will have an impact on activity going forward. And number 3, we're still in the middle of a deleveraging process, so we don't foresee bank credit growth picking up in any meaningful manner. Despite the fact that we think growth doesn't pick up as much, and therefore I don't think the kind of momentum you saw in core can continue forever. Despite that slowing, I think the MPC will have to move again. I think we've seen that they've been very data dependent. Whether they move in August or October, I think will come down squarely to where is core inflation in the next few months and what happens to oil prices. Our baseline cases, having moved in June, the MPCs bought themselves some space. I think by October, we'll have a much better read on the monsoon and on the MSP increases. So our baseline cases, you get 1 more rate hike in October, but that could easily move up to August if the next 2 data prints have very sharp core momentum.